Let me tell you something that might disappoint you. Long-term investing is boring. No flashing charts. No 10x in 10 days. No dramatic wins. No heart-pounding action. And if you're a beginner investor, that might feel underwhelming. But here's the truth. Long-term investing is boring on purpose. And that boredom? That's exactly why it works. Today, I'm going to explain why the most successful investors in the world aren't chasing excitement. They're building systems that feel almost dull. And by the end of this video, you'll understand why boring might be your greatest financial advantage. What beginners expect investing to be. When most people first think about investing, they picture day trading, crypto spikes, stock tip, watching charts all day, buying and selling constantly. Social media makes it look like everyone is getting rich overnight. You see someone turning $500 into $50,000. You see screenshots of massive gains. You hear about people who called a stock before it exploded. But what you don't see, the thousands of quiet investors who simply bought good investments and waited. What long-term investing actually looks like. Let's talk about what real long-term investing usually involves. For many beginners, it means buying broad market index funds like an S&P 500 fund. That fund tracks companies in the S&P 500, 500 of the largest publicly traded companies in the United States. Instead of trying to guess which one will win next year, you own all of them. And then what do? You keep adding money regularly. You reinvest dividends. You don't panic during downturns. You wait 10, 20, 30 years. That's it. No drama. No constant decisions. No adrenaline. Just consistency. Why boring works, the math of compounding. The real magic behind long-term investing isn't excitement. It's compounding. Compounding means your money earns returns, and then those returns earn returns, and then those returns earn returns. Over time, that snowball becomes enormous. Historically, the S&P 500 has returned around 7 to 10% annually on average over long periods. That doesn't sound exciting. But here's what makes it powerful. If you invest $500 per month for 30 years at 8% annually, you don't end up with $180,000. You end up with over $700,000. Not because you picked the perfect stock, but because you were patient. Compounding rewards time, not excitement. The psychology trap, why excitement hurts returns. Here's something most beginners don't realize. Excitement is often the enemy of returns. When investments feel exciting, it usually means prices are moving fast. Media is talking about it constantly. Everyone is piling in. That's often when assets are expensive. On the flip side, when investing feels boring, nothing dramatic is happening. News isn't hyping it. Your account is growing slowly. And that's often when you're building real wealth. Legendary investor Warren Buffett didn't build his fortune by chasing trends. He focused on buying strong businesses and holding them for decades. He once said, "The stock market is a device for transferring money from the impatient to the patient." Long-term investing works because most people can't tolerate the boredom. What boring looks like in practice. Let's make this practical for beginners. A boring investing plan might look like this. Open a retirement or brokerage account. Invest in a low-cost index fund tracking the S&P 500. Set up automatic monthly contributions. Ignore daily market noise. Rebalance once a year. Stay invested during market crashes. That's it. No daily trades. No constant research. No reacting to headlines. In fact, if you're checking your portfolio every hour, you're probably doing it wrong. The less you touch a well-built long-term portfolio, the better it often performs. The hardest part, doing nothing during crashes. Now here's where boring becomes emotionally difficult. Markets crash. They always have. During recessions, bear markets, and crises, the S&P 500 can drop 20, 30%, even 50%. When that happens, long-term investing feels anything but boring. It feels terrifying. But historically, the market has recovered from every major crash. The investors who win are usually the ones who didn't panic sell, kept investing, stayed patient. Doing nothing during chaos is incredibly boring and incredibly powerful. Reframing boring as freedom. Here's a different way to think about it. Boring investing gives you your time back. Instead of watching charts all day, you can build your career, start a business, learn new skills, spend time with family, focus on health. Your investments quietly grow in the background. That's the goal. Wealth building shouldn't feel like a second full-time job. It should feel automated, predictable, almost forgettable. So yes, long-term investing is boring. No firework. No overnight millions. Just steady growth. Patience. And time. And that's the point. Because in the world of investing, boring wins.